Hi everybody, welcome to the second video of this weekend for the week ending January 29th, 2021. It's Wes with Pikes Peak Trades, and this video is focused exclusively on gold, silver, and the miners. Um, very interesting week and some interesting things to talk about here. Want to begin with the US dollar and just show you the correlating move in weakness in the US dollar throughout the year 2020, filling out almost to the apex here of kind of a parallelogramish shape that originally I thought was maybe a cup and handle for a more bullish move on the dollar. But I actually think this is going to end up breaking to the downside. I think this weakening dollar, along with a further move into more negative real interest rates, which really means an acceleration in inflation, is what could really trigger a massive move over, let's say, the next 3 to 4 months in gold, silver, and of course in mining stocks. So that's where the thesis needs to begin. If you want a much more in-depth fundamental analysis about the relationship between real interest rates, I would recommend you follow Patrick Kareem. I think his Twitter handle is BadCharts1. He gives excellent long-term historical and technical analysis and makes a very strong case that as real interest rates accelerate negatively, which means inflation rising, could also mean a lowering in actual nominal yields. So if interest rates fall, that can just accelerate this process. If that happens, we're looking at that fundamental backdrop to really kick off these moves. Okay, if I take you into a daily chart of DXY, using that as the US dollar proxy, you can see it's kind of flirting with a breakout of this longer term down channel, but still holding beneath this high. And I think we need to see some quick movement down if we're going to see the acceleration in the moves that I'm going to be suggesting on the coming chart. So certainly want to keep in mind dollar movement along with what I'm projecting. So let's begin with GLD. We're going to see lots of monthly charts. I'm going to break it down by time frame all the way through the metals, then into GDX, and then into individual silver miner names. So here we're looking at what I have charted on the monthly of GLD, that we put in a significant cycle 2 low in late 2015, and we are now working within a very bullish primary 3 of a cycle 3. So this is typically the place in the EW progression that has the most bullish waves, and what we're looking for right now is the breakout of this very long bull flag all the way back from early August. And if I take you into now the weekly time frame, you can see that we've kind of just moved over the last few weeks right up to the top. And I'm going to suggest, when I now take you into the smaller time frames here, that what's going to be needed, I think, is going to be a gapping move. I think you're really going to see that on GDX, but to really get up and out, I think it's going to take a big gap, not a false breakout like this, but a big gapping move, possibly with a back test, that's going to start its nested progression in order to fulfill these degree 3 waves. So into the short term, that's where I have it. I have it ready for maybe a jump the creek type EMA and bull flag breakout to get this cycle moving. Okay, now let me get into here. We'll get into GDX here. I want to show you SLV first, so we put the metals in context together. And again, early stages of a very bullish progression. I've got this in primary 3, of cycle 3. And when I break it down to the small time frames, you're going to see I've got it in an intermediate 3. So I am speaking to you this weekend while we are watching these things in the most bullish Elliott wave progressions that you can chart. So take a note of some very, very important uh, horizontal pivots. Those are going to be really, really crucial if you are trying to swing these things from shorter time frames. I mean, you're going to see some recommendations from me, especially when we get into the minors. You've got to pay attention to horizontal pivots. You see going all the way back about a decade, this roughly $26 to $27 area is significant resistance. And that's what's got to be conquered in SLV. So we are tagging right up to it. I think the more times that a name punches against upside resistance, the weaker it gets. It's like boxer with body blow after body blow, and then here comes the knockout punch. I think it's ready, just like with GLD, it's ready for that gapping up move. Now, I would be silly not to mention what I'm sure you're all noticing on Twitter around the world, the squeeze silver hashtag going viral. It has caught now mainstream and retail attention, and we're just beginning. So we are nowhere even close to the end game here. Look, I've got this right in the heart of an intermediate 3, of a primary 3, of a cycle 3 that you saw in the monthly chart. So to me, it's actually no surprise. Why is this happening right now? You know, maybe the squeeze silver and what happened with GameStop and AMC and the pump up in First Majestic and AG that I'm going to show you in a bit. To me, it's not coincidence. I think the waves were leading this movement, and we probably just got the catalyzing trigger to make it happen. So I want to continue with the progression of SLV. So showing you again, we're right up there, ready to challenge and move up. And you're going to see in the smaller time frames, I've got it in a minute progression. And then right in this 26 to 27, there's going to be some congestion that's going to happen right in here. It's going to probably have a couple back tests before it can really, really get moving to some of those much higher and significant horizontal pivots. And then when ultimately is I'm looking for this to happen in, let's say, late March, April, maybe even into May. And by all of the channeling things that I'm going to show you, that progression, if you take that with what I just showed you in my general stock market A to Z video, is really lining up well. I think it needs to make this convincing. So what would we be looking for on SLV? They like to extend in what I'm tracking as fifth waves. Would we move up aggressively early this week, a back test, and a couple more back tests like I just showed? Okay, now, not everything is just all rosy here. We've got to take a look at some ugly candles as well, because up until Wednesday, things were looking really terrible. I'll comment on that more in a bit. We've got a really nasty looking monthly candle on GDX. And this is the one where you're kind of like, is this enough in the face of the whole sector to pull it down? I'm going to suggest no, but you do have to look at that, and it's got to get your attention. So we've got to see immediate recovery in GDX and GDXJ. We did get the recovery late in the week, but it now has to be sustained. So I break that down here into the weekly, and you're going to see what's it going to take, just like I'm suggesting on GLD. I think it's going to have a big gapping up move. If I take you into the daily time frame now on GDX, you're going to see that when it attempted to do it, so that what I'm saying, the attempt is to break out of this about 6-month bull flag here, this resistance line. It tried to do it here on a gap, but it failed. It tried on a gap, and it failed. I think it's got to go again on a gap. But this time, that gap has to stick on the back test. You're going to see it. Here's the gap. Didn't stick. Here's the gap, and it failed. This gap back test needs to hold. And in order for this whole thing to play out, we've got to start seeing these moves stick and then move with momentum. Okay, so that takes you through kind of the big picture of the metals and of GDX. And now I want to transition us into a tweet that I gave you talking about on Wednesday the potential of these bearish monthly engulfing candles. And I was using Defiant Silver. So this is a Silver Junior. It actually had halted trading for a while this week, and I had said it basically needs a stick save in 2 days. Now, when I show you the tweet, you'll see just how far down it was. Okay, on a percentage basis, it was almost 20% below what it needed, and in 2 days, it didn't conquer it, but it's only about 1.5% less. So this is a little concerning still that it couldn't get it done, but because trading was halted for a while this week, I'm probably willing to say, we can write that off a little bit, but I want you to also notice how close we were in some other names. So let me show you Hecla. Hecla's low of the week on the daily was on Wednesday, and Thursday and Friday, look at the massive move to avoid a complete outside and engulfing candle. And if I showed you CDE, if I showed you FSM, if I showed you Pan American, you're going to see the same thing. We had the old proverbial hockey stick save. Now, is it going to continue to stick? That's what we need to see. And I'm suggesting if it's going to happen, I think we're going to see it with the gap up on Monday. Okay, now, super interesting things here. And I want to begin with a yearly chart. I actually want to break that a little further back into a monthly chart of Coeur d'Alene mining. So you're going to see 2 monthly attempts, back-to-back attempts, December and January, to break out of this rail. And you might be thinking, well, a lot of technicians put lines and rails on charts. What's the significance? Well, let me show you the annual chart. What significance are we talking about? We're talking about 25-year resistance. And that, if that doesn't perk your attention, I don't know what will in this sector. We're talking about the potential of a breakout that's had 25 years worth of attempts. If that doesn't get your attention, then you either are not willing to listen, or you don't care, or you don't believe me. But when I see this happening in the progression of these nested threes of threes, this is where I want to start parking money. So with CDE, are we going to get that fresh attempt this month? And my suggestion is yes, that we're going to see rapid price movement in February, March, and April. And my projections, although I've got a doubling happening over the next 2 months in something like CDE, they might actually be conservative. And to show you that, let me take you into something in the junior sector like ABRA Plata, one of my favorite silver juniors. If we just look at what happened from March to the end of August here, if I just look at the percent increase for those months, it's a 14.13 times movement. Okay, so subtract 1, multiply by 100, it's a 1,313% increase. So when I'm showing you a typical set of Elliott wave extensions, and I'm suggesting a doubling, I'm suggesting that in the face of something that's gone up over 1,000% over the course of 8 months. Actually, less than that, 5 months. So we don't really know how far these are going to go. So I'm giving you my best and typical Elliott wave progression, and I think using some of the big boys like CDE is probably the safest way initially to start. So looking for some channels to hit, I'll be able to suggest some timing. If we look here, and probably really best shown on the weekly, that these typical Elliott wave hits for the final move, the big move of 2021, in the March to April timeframe. And then I'm anticipating, like I'm anticipating with the general stock market indexes and almost all the names, a pretty frustrating downward move for much of the rest of the year. Okay, so let me take you into Hecla. How about significant resistance in Hecla? How about more like 50 years of resistance? We're talking about potentially massive breakouts. It's tried it twice, back-to-back months, got kicked back twice, and just like those boxing body blows, at some point, will it land the haymaker? And my suggestion is it might now be ready within these primary threes of cycle threes. If it's going to happen, it's going to happen now. This is the readiness for these events. Okay? So what do we need to see? Well, we've got to see a move up, a back test, but it's kind of got the rail here. And I'm going to be able to give you some price projections, especially if you're trying to swing things like maybe March or April call options, especially for March call options in a name like Hecla. We've got to be looking for double rail resistance. So anything in here in the low to mid eights by the end of Feb, if you are in March call options, you want to take those profits. We're not going to go straight up. There's just like everything, there's going to be some volatility. I'm expecting a big move. And then around these areas of resistance, we have to be expecting here some volatility. So I'm suggesting each name is going to have them. And it's going to be in these breakout areas that are going to have to be conquered in order for these upside targets to get hit. Okay, let me finish here with AG. So our first majestic, the one that's getting all the pub, we've got this double railed resistance happening from its cycle one, and we conquered it on the massive moves in December and January, and now we're starting to push some even longer term resistance here all the way up. So there's no coincidence to me why AG stopped exactly where it did. It's this parallel rail off this lower channel, coupled with a very, very long term, more than a decade, resistance line going back to its first cycle wave. Okay, so again, we've got to look to conquer those with a strong move up, a back test that holds. There's that picture here now on the weekly. And again, I just don't know if these targets are too conservative. This is the typical Elliott wave extension. If we see more 18, 19, 29% weeks, then this is going to become a 2.62 extension or possibly more. But as of now, with channeling and typical EW movement, something in the mid to the end of April around these targets is what I'm going to be projecting. So it's incredibly exciting, as I hope I'm convincing you with where we're at, with fundamentals, with where we're at, with even some retail exposure happening within these Elliott wave progressions. I think this is the outperforming trade of 2021. And I'm willing to park a significant amount of money into this for about the next 3 months. And we reach some of these targets and some of these channel lines by April. And I think at that point, it's time to ring the cash register. Keep in mind, as I'm suggesting, this is a volatile sector. We're not going to go straight up. Even with something as now name recognized as AG, there are going to be volatile pullbacks. So if you're trying to swing this with short-term options, it's going to be a great idea. Pay attention to some fibs, pay attention to some pivot and some channel resistance, and I think that's going to help you with your decision making. Otherwise, grab the long stock, hang on, don't look at the day-to-day daily noise, and let's see where we're at over the course of the next 3 to 4 months. I'll be right with you every step of the way on Twitter, as always. Hope you learned something. Hope you found it informative. I'm certainly excited about this, and let's see what happens this first week of Feb.